U.S. stocks were down at close after choppy trading on Thursday as markets attempted to recover from a sell-off in the previous session sparked by worries around more imminent rate hikes from the Federal Reserve. The Nasdaq clawed back in intraday trading but ended in the red, remaining on pace for its biggest weekly decline since November after Wednesday's 3% drop marked the benchmark's worst single-day session since last February. The Dow and S&P 500 also closed lower. Employment data has been in the spotlight this week, with the Labor Department's key monthly jobs report due for release on Friday. The read on December's numbers is expected to offer a more meaningful look at the strength of hiring and labor force participation, key measures of the U.S. economy, made even more consequential as markets continue to mull the full impact of the Omicron COVID wave. Economists anticipate the report will show a month of solid job growth before the latest virus surge meaningfully impacted the labor market, with consensus estimates at 444,000. Investors also weighed a fresh read on initial weekly jobless claims Thursday morning that showed first-time unemployment filings ticked up but remained near a 52-year low last week, signaling continued recovery in the labor market as high demand for workers pours into the new year. Continued pressures in tech persisted into Thursday, with a near-record number of technology stocks seeing market values head from their 52-week highs, according to Bloomberg Data. If you get nervous over a 4% or 5% pullback, you probably shouldn't have a lot of money in stocks, Wells Fargo will. Whether the Fed puts its first hike in March or in June, you're splitting hairs there within a few months. OANDA market analyst Craig Erlam shared similar sentiments with Yahoo Finance Live. Markets need time to settle. We've got the earnings season starting in a couple weeks' time, he said. I think that's when people start to get a better grasp, or at least look at these markets through a more rational lens. Still, the pace of interest rate hikes remains a key component of investors' outlook for 2022. Markets will continue to assess the rate of inflation into the new year and keep a close eye on how aggressively the Federal Reserve may choose to intervene. We think inflation is likely peaking now, Cresset Capital Chief Investment Officer Jack Ablin told Yahoo Finance Live. We think the natural path of inflation is going to trend lower, but either way, it looks like inflation will likely trend back to 2 1/4, 2.5, by the end of the year. The primary piece of the puzzle is the Fed, Zephyr market strategist Ryan Nauman told Yahoo Finance Live.